Hey people, thank you for stopping by at Building Wealth with Rajiv. Here's my chat with Dan Ives. Dan is one of the top technology analysts on Wall Street. He's currently managing director at Wedbush Securities. He's one of the few who got Tesla stock right. Dan, we talked about a couple of things. Tesla's Q4 earnings. What did Dan like? What did he dislike? Tesla's future catalyst. His view on FSD, full self-driving, and Tesla robot. Which competition comes close to Tesla in technology? And last but not least, Tesla's comparison with Apple. What can these companies learn from each other? I hope you enjoy the chat. Please share with your friends if you like the chat. Please follow the channel for such great stuff in the future again. See you soon. Now, the earnings have come out. A lot of people ask you what you'd like. Let me start. What did you dislike about the earnings? Any pain point for you?
Look, I think the call was clearly not handled well, which is always a double-edged sword when Musk comes on. I think in this jittery environment, investors just want to focus on demand. Giga, in terms of Austin, that's come out, 4680 build out. I think there was definitely some concern on the supply chain. It felt like maybe yelling fire in a crowd theater. Some anticipation of a model sort of layout in terms of new products. And look, in terms of new units, like right now, it's biggest chip shortage in modern day history. They're not going to release the Cybertruck. I mean, they'll do that in 2023. That was no surprise to us. But I think overall, the feedback coming off was investors just didn't have the warm and fuzzies. And I think you saw the stock sold off. I do believe Apple calmed the nerves, talking about supply chain. You've also seen some positive supply chain stuff come out over the weekend. Look, and then it comes down to, like, if I'm Musk, I'm not going to come out super aggressive on capacity for the year. I mean, you want to be conservative. I just think the way it was done, talking about robots and some of the longer term, sort of projects, it was not the right time to do that. And I think the stock sold off accordingly. But I think more and more as investors have digested it, I think you're seeing that was an overreaction.
Yeah, I think so. I heard earning call, and I think it's pretty boring. If you ask me how exciting the company is, but the call was so damn boring. I mean, Musk rambling again about more of his vision. But anyway, that's what he is. And what did you like?
Well, I mean, there was a lot to like. I thought the most important things from the call, it was not demand. It was not anything that Musk really talked about in terms of some of the longer term vision. It was confirmed Austin was up and running, starting to produce Model Ys, just needed certification. That was huge. I think that's one of the game changers to the whole Tesla thesis in terms of capacity build out, especially as Giga Berlin continues to go through red tape. The second was the 4680. And there was a lot of speculation, was 4680 going to be in Austin in the Model Ys? They talked about that. And I think you combine that with where units should go this year, the automotive gross margins, which were 150 bips above our expectations. I mean, that's the bull thesis for the Tesla story, with potentially $30 earnings power by 2025. But in this market, you're going to see these types of reactions, especially in a name like Tesla. I thought it was a hugely bullish call. Stock selling off the day after in a jittery tape, we thought was just a way overreaction. But it goes back to, like, that's in a rising rate environment, valuation sensitivity, macro geopolitical, supply chain worries. You're going to see these types of moves.
Yeah. So one thing I noticed, Dan, I don't know what's your view, that during this time when we have seen drawdowns, I mean, some of the growth stocks, I mean, which I hold, unfortunately, fortunately, whatever, 40 to 50% drawdowns I've seen. Tesla held up reasonably okay. I mean, not so bad. I think range bound between 1100 to 900, isn't it?
I mean, look, I think ultimately it was really the 4Q deliveries that really held that stock up. I mean, the deliveries in the midst of the supply chain, I mean, let's call it 309. But if you actually factored in with the supply chain, it probably would have been about 330. Okay. So I definitely think that was a big part of what held the name in. And look, I think the growth drawdown, it's been violent I think it's overdone. I'm not saying froth coming out of the market was going to happen. Some of the names clearly sell work from home, e-commerce, and others. I just think when I look across like this fourth industrial revolution, names like Apple, Tesla, a bunch of other FANG names, supply chain plays on the chip side like AMD, NVIDIA. I mean, to us, we're just buyers of the market. That's how we've been hand-holding.
Yeah, I've been following you, Dan, and I know your view on technology. Now, are you into those games of guessing bottoms that this market has reached its bottom, or are you do you see that? I know you're bullish on technology in general.
Look, I mean, doing this 21 years, like, I mean, I've worked with many economists, colleagues, technicians. That's not my game, right? Like, in other words, like, I don't try to call bottoms. I don't, and to some extent, I try to stay like almost unemotional as much as possible, through names. I feel like we talk to a lot of institutional investors. So I feel like I do get a good sense in terms of panic levels, what people are nervous about going into certain prints. Of course, the retail community has become bigger and bigger presence, right? Especially on social media as well as even from a trading perspective. But that's why I think sometimes the overreactions, they generally, in my experience, have created more opportunities
Mm-hmm.
than head fakes.
Mm-hmm.
But I do think part of like in this time market, like the volatility is going to increase. It's a Fed driven, whether it's job owning, whatever it may be. And I think on some of these names, you're going to see these types of moves, which, I think you got to navigate based on your risk profile. But that's why I think it's, I think we've talked about its biggest tech earnings season in a decade because you need to see the fundamentals come through.
I agree with you there. No, just switch back to Tesla, I think, because it's such a fascinating company. Now, is Tesla EV company to you? Is it an auto company? Is it a robotics company? What is it for you?
I've never viewed it as an automotive company. Like I've always viewed it as a disruptive technology player, and even appeal that onion way, like Ford, GM, VW. Like how much software do they typically get from a customer? It's negligible. Tesla on average 10, 12,000 plus. I mean that's a key to the Tesla story. It's almost like the software piece, whether it's FSD and other pieces of the software. It's a key part of the valuation. And I've always viewed electric vehicles going back to 2008, 2009, that like it was eventually going to be the biggest transformation to the auto industry, since 1950s. So as it plays out, where I disagree with some is like, and again, it goes back to like on a name like Tesla. Split adjusted, many have hated it since 100. They're really going to hate it at 4,500. So it just, you're never going to change some of those mind. It is what it is. That's what makes up a market. But I feel like where many have missed Tesla, it's the same that I've missed the Amazons, Apples, Microsoft. We go through the transformational names where they viewed it as a traditional auto company. I'm going to compare it to Ford. I'm going to compare it to GM. I'm going to compare it to whoever it may be. Where I've always viewed it as disruptive technology multiple. And I think transformational names, if you just look at a straight PE in the next 12 months, I feel like you missed the transformational growth names. You got to look at to where, when they get to scale, what the earnings power and free cash flow could be. And that's how I've always viewed Tesla. And I think you're obviously you're seeing clearly like shifting views from an institutional perspective. But also, I don't view it as like a zero-sum game. Ford could be successful in F-150. GM could find its own success on EVs. Lucid could be, NIO could be. But I view it as 5 trillion over the next decade. So I don't view this as it's Tesla or the others.
Yeah, yeah. No, I think the addressable market is expanding and it's huge. I think it's not like 1% show. Now, Elon talked about FSD is going to be reality by end of this year. You believe this? You think Elon sometimes can be very aggressive on the timelines, but
I think FSD is a 2025 and onward story.
okay.
I think in the near term, and I don't think the stock doesn't reflect FSD, robotaxi. I mean, there's a lot of things where I think institutional investors will take a more cautious approach, which I think is the best way to do it.
Hmm.
Musk is always going to talk about those visions, but I really think the next 18 to 24 months of the Tesla story, just take everything aside, FSD, robots, whatever you want to call it. It's like, it's the build out from a capacity. Austin, Berlin's going through a lot of red tape. Like, you need to see that up and running because there's starting to be some doubts creep in on that Berlin build. So they need to make sure that like that starts to get up and running at some sort of capacity. Austin's key, 4680, making sure demand could actually, you now have supply to meet demand. Right now, demand estimate is supply by 30%. You need to get 2 million vehicle output units from a capacity by the end of this year. And you need to get to over 3.5 by the end of 2023. That's like,
Okay.
that's the Tesla story. And I disagree with some because I hear it from institutional investors. I hear it like on Twitter and from retail. They'll do the call. And everyone's like, oh, I'm disappointed. No new model update. You want them to focus on task at hand, 12, 18 months. That's why Cook is a tactician. Cook's the gold standard for every CEO. Every CEO of every public company, in my opinion, or even private ones that want to be public, should be required to listen to like 16 or 30 earnings calls of Apple and take some tests in terms of Cook. It's just my view in terms of like how he does the calls, communicates, navigates the street.
No, it's interesting. I think, and this was not in a question in my mind, Dan, before, but now I think when you're talking about it, what's the parallel between Apple and Tesla? I'm talking about these companies. What's the parallel? Where are the similarities? Where are the dissimilarities? I mean, both are iconic in some ways, right?
I think similarities in terms of iconic brand, iconic install base. Apple, obviously, an install base of 1.8 billion iOS devices. So, the most successful consumer brand in the world, the innovation level. But part of why Apple is in around 3 trillion and Tesla's in around 1 trillion, because I believe like there's a lot of characteristics of Apple that Tesla needs to follow, like continuing to innovate, making sure that they monetize their install base, the communication, that's key. Musk, you're never going to put Musk in a swim lane. I mean, Musk is always going to do what he wants, which is part of the genius, it's part of the blessing, it's part of the curse. But I think when you look at Apple and Tesla, like there's similarities. Like the only two companies that are massive, U.S. companies that are massively successful in China from a demand and a supply. There's, more and more like there's a lot of similarities in terms of those brands and in terms of how they ultimately attack the market.
Yeah. Now, yeah, and style. I mean, obviously, one has reinvented the phone and one has reinvented the auto. I mean, that. Now, you talked about China. That's an interesting point, Dan. I've lived in China for 5.5 years, and I've seen some of the very close working of the party out there. Some of my friends were party members as well. Does it bother you, Tesla's reliance on China? I mean, there is quite a bit of reliance on China, isn't it?
But it's never bought because I view it as a key part of their success. It's just like Apple. Like all iPhones are made in China, in the spot, and 20% of demand. You look at Tesla, Giga Shanghai has been a huge part of their success. And from a supply perspective, profitability, and it's a huge part from a demand perspective, given the China market. So I've always viewed that as one of their keys to success, not necessarily bothered by it, but clearly a lot of, and as you know well, like a lot of tightrope they need to navigate in terms of in and around China, political environment, Beijing, regulatory. Cook's been the tactician. Musk has, I think, done a good job playing nice in the sandbox. You go back to a year ago, all the issues that they had in China, PR issues, the Shanghai Auto Show, safety issues. Look, that's probably the biggest risk to the Tesla story is like navigating that and not tripping over the shoelaces there.
Yeah, I think that's what I meant because as I discussed in the beginning of the interview, Elon is saying all the kind of shit things about President Biden, but he holds his tongue when it comes to China because he knows he'll be screwed. So I think he's playing a very smart operator there.
But also the Biden stuff, it's also because you go back to how this all started, like more and more tax incentives for U.S. automakers. I mean, look at Ford and GM, the union component of it. And then it's not including Tesla in that conversation. It's clearly ruffled feathers. And look, and I think part of it is like, it is important to include Tesla as part of the solution when it comes to within the US. Because look, the US is like lag. I mean, it's no secret. It's lag behind Europe, China, Asia in terms of EVs. Infrastructure is a big part of it. But I do think that's something that's going to be key, going forward.
No, I get it. Now, vulnerabilities we're talking about where is Tesla vulnerable. One thing about China, I think there are these risks will always be there with China. I mean, China is not going to change. You got to adapt to China. Second thing, I follow Gary Black on Twitter quite a bit, and he talks a lot of sense like you, Dan. He talks about he consistently nudging about a PR department. Tesla not having a PR department. Does it bug you as well?
Look, I mean, I think a lot of the points that Gary makes, they're great points. I mean, because when you look at Microsoft, Apple, IBM, I mean, pick your spot, Amazon, Google, Facebook, the PR, the presence in the street, the communication it's super impressive, and they're able to navigate successes and failures. And it is important to like capture the right narrative. And I think we saw that during earnings. Like, I think that was one where it's like great numbers, solid guidance, but yet the communication strategy went off right. And I think that it is a big problem. I think it's something that, especially as competition increases. Now, remember, some watching the video will be like, there's no competition. It's only Tesla in it. I get it. But when you have billions and billions that are being spent on EV, the PR component, this from 100 plus automakers, which include the biggest in the world, like you can't deny that. Like there is a PR component. I think that is something I would like to see start to mature.
Yeah. The funny thing is, Dan, I was talking to a friend of mine who's like a retail investor like me, a young guy working with Google. It's kind of buying Tesla pretty much. Is holdings is very concentrated portfolio runs. And I was telling him that one of the big risks with Tesla is who is after Musk, who is after Elon Musk. And his reply to me was that institutions will love somebody without Musk because Apple stock has done so well under Cook, after Steve Jobs. Do you buy into that? Do you think that?
I think it's different. I think Musk is it because Musk is a key part of the innovation and strategy of Tesla from day one, and that's why it's one like him being more engaged is clearly a positive. But look, I think Zach has had a big impact positively, like in terms
Mm.
of the calls and the communication. And it's one like you want Musk on the calls from a communication. When you could Twitter and a lot of these things, like look, it's a double-edged sword. It's part of how Musk has built his presence into where he is. But again, you have to like read the audience, read the room. In markets like this, I mean, it's jittery markets, and you could easily on conference calls and communication really, I think miscommunicate some of the strategy. I think that's what happened on Tesla's conference call.
Yeah. Now, 2030, I know, Dan, you talked about 1 or 2 years, and you talked about 2030. Imagine we are in 2030. What does Tesla look like to you?
Well, I think first you got to look at units. I mean, today we're talking about 900,000 going to 1.5. I think that's where you're starting to deal with units, north of 10 million, in that sort of 10, 12, 15 million, which is important because from a unit perspective, you won't just be talking about Model 3, Model Y, it'll be Cybertruck, Roadster. And I think there's a lot of other, even lower cost Teslas that you could actually start to see hit the market because of battery technology. Battery technology continues to be key that you could get to a sub 30,000 type vehicle. Scale is going to be key. And I do believe that's also where the FSD story is going to play much more of a role in Tesla. But it goes back to like, look, I mean, covering like some of these names from the beginning, like I could tell you like Apple iPhone launches 2007, iconic 08, 09. By 2011, like there were a lot of investors being like, okay, this is great, but this could just be another BlackBerry, could be another Nokia. Then think about the next stages, right? I mean, if you start to think about like the product releases and then from services to AirPods to, and the rest is history. I'm just saying, right? These transformational stories, like they go through iterative processes. Just like I saw Amazon go from a bookstore to where it is today.
No, I'm just trying to get at, let's say in 2030, could it be a $7 to $8 trillion company? Do you see it's going that far? Or is it just retail investors love to talk like this. I know that you're Dan on Twitter.
Yeah, I mean, look, we've talked about that. I think Tesla is a name where they will continue as they execute, valuation will continue to increase. And I think it's one like they're going to have to kind of prove that profitability and margin story. But a lot of it is really going to be capacity. I think Tesla's in pole position to have massive success in EVs. But also, I think as much as you want to look out to some of those years, 2030, I think it's also important to like over the next few years, make sure they hit all their target unit build out, and especially 4680.
Yeah. But I think I come back to this two things. I think I just want to kind of, which I've been hearing a lot. Again, I come back to FSD. Are you a believer that FSD will work? Let's say 2025, 2024, based on your knowledge, do you think it will
Oh,
work?
I'm a believer that FSD
Okay.
is real and it's going to play a big role, not just for Tesla, but in the automotive industry.
Okay. And how about this Tesla vision of robots? That
Look, I mean, my
is it
view
gelling with
there,
you?
it's not,
No?
I mean, I get it, but and I can't discount what they're doing. And I think maybe in the longer term vision, but that's where like those types of conversations from an investor perspective, you're gonna get some that love it but the majority are not. I wouldn't say they're not supporters or believers, but like it goes back to like you don't want to see Tesla take their eye off the ball. And that's the biggest worry is that there's a balancing act here.
Mm-hmm.
But look, I mean, it goes back to like Apple. Within Apple Park, you know how many next gen technologies they've worked on that have never seen the light of the day? The only difference is they're not talking about it. They keep it in the labs in Cupertino. But that's a good example, kind of like some of the stuff Garrett talks about. Like, it's fine for excitement, but there's a balance too.
No, no, I get it. No, I don't know whether you read today. I was reading newspaper today. GM has come out. You know, GM chairwoman, the lady which President Biden keeps giving out
Mary
credit,
Barr, yeah.
and I don't know whether that credit is well deserved or not. Is that by 2025 they can take over Tesla? You think so?
No, I've never viewed. I mean, look, I think that's first of all, I believe GM is going to be very successful in their own EV penetration strategy, and that's key, to GM stock as that re-rates. And I don't view them mutually exclusive. For GM, it's about can they 7.5 to 8 million vehicles they produce a year. Can they convert 10, 20%? If they can, the stock gets re-rated and it's an $85 to $100 stock. But Tesla is so far ahead of competitors. I don't really see that anyone's ever going to overtake Tesla. It's really about, that iron grip that they have on the market. And it's about who's going to be the 2, 3, 4, 5, 6, 7, 8 players.
Okay. I think I have a couple of more minutes with you because you have a hard stop, and then I'll speak. Now, in terms of technology, Dan, and we know the EV market is expanding, but in terms of technology, which company close comes to Tesla? Let's say people talking about Lucid. I mean, the car looks really nice. I mean,
I think it's NIO. NIO's battery technology is, I believe, extremely innovative. I believe their vision is unique and special.
Okay.
Scale has been an issue for NIO, just like Lucid. But if there's a company, and this is not that it's they're going to overtake Tesla. I'm just talking about like other EV names that I think are special. I think NIO is one in terms of that really sticks out. And Alive is just, I've spent a lot of time in and around China, and I think the stuff that NIO's done, what they're building out, their vision, I think is super interesting. I think when it comes to traditional automakers and who's going to have success, I think it's compartmentalized. I do think like F-150, the EU F-150 on the pickup is super interesting because look, you talk about Cybertruck, like pickups is going to be a huge arms race. Rivian, Ford, GM, of course, Tesla. I think that's something that's going to be fascinating to watch in terms on the pickup side.
So I get it. So a Chinese manufacturer in car, but in pickup trucks, some of the US manufacturers. Is that what you're trying to say? I think, yeah, it makes sense. Now, 2 more questions and then I'll let you go, Dan. Technology stocks, you're covering so much, Dan. I know you're going about 40, 50 we talked about in Dave's show. Which is your number 1 pick? Is it?
Look,
if you have to pick one.
If I had to pick one name over the next decade, it's Tesla because of the disruptive technology piece and where EVs are going. And I think, and then I think when you look at core technology players, they're going to continue to innovate. And I think the street continues to underestimate, it would be Apple. Look, and that's why I get back to like Apple and Tesla continue to be our favorite with Microsoft, our cloud play. And that's sort of been our trifecta way, along with many other names, to play what I view as trends in terms of fourth industrial revolution.
Okay. Last question, Dan. Your price target is about 1400, the 1004. This is the base case, right?
Base case, bull case, 1800. And a lot of it on the base case, it's what that auto gross margin profile looks like. Can they get to 2 million capacity for the year? Street will basically start off 1.45, 1.5 million units for the year. And look, best case, like that could continue to move up. But the last thing you want to see is coming out of the gate saying that they could do 1.7, 1.8 million units. Because it sets it up for just way too high of a bar out of the gate. As they execute, EPS profile starts to expand. I think that's when they grow further into the valuation.
Difficult question, the last. What will make you negative on Tesla? What developments? I know you've been such a bull.
Probably it's probably something happens to the China story.
Okay.
That like regulatory as it's focused on Tencent and the domestic players, obviously JD, Biden, all of a sudden like they start to focus on Tesla and Musk doesn't play nice in the sandbox. Like that would be probably like the biggest rate, just because we think 40% plus deliveries come out of China and Giga is so important.
I think then that's it. I think I'll leave you a minute.
Well, thanks for having me. It was great.
Thanks. No,
great talking
absolutely.
to you.